Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 27th of May. So I've seen some good action this week between some of the key zones that we drew up last week for scalping on some of the majors and some of the key indices. So we'll jump straight into the chart and see if we can identify any trades for today or early into next week. So I'll start out here with the Aussie USD. The one we always like to start with because it really sets the tone for, basically the movements. This has been really in sync with a lot of the moves that we've seen on a lot of the key indices. They're basically moving the same percentages, which is really good or very similar to. But this one gives us a really good lead because it's done exactly what we wanted it to do, and it's finding places of support and resistance at really important zones. And this one's no exception, obviously. 71 cents is a very key zone for the Aussie. We've been talking about it for weeks now, really, and it finally got here this week. We can see here it's tried to break through effectively 4 times over the 4 days and has failed to do so at every point. So, we know that it's important. Obviously, all of the previous support there tells us that, so there's no secrets there. But you can see, though, that there is a bit of a war. It's not exactly selling off here either. You can see a couple of very big wicks on the last 3 days worth of candles, the daily chart, of course. So you've got to be mindful of that and know that even though it did hit the resistance, it hasn't just fallen away from it. So what we're wanting to do, is really probably give it the time. You can see the MACD on the daily is actually rising. You can see here that we've got the signal line well and truly out of the MACD. So, we know already the 12 and the 26 are already climbing. We know that. And we are trading, most importantly, above the 20 moving average now, whereas last week we weren't, this week we are. So if it's going to break, it's probably going to set up for a break around this zone right here. So what we need to be doing is really just being really conscious of what happens here. If we get a daily close, for me, it has to close above the 71 on the daily chart to be, convinced that it's going to go longer. It just needs to do it because it's failed to do so far, and even a break on a 4 hour is just not going to cut it because it's really could be just a bit of a fake out. So if we get a daily close above this level, so if we get a daily close, say above 71.20 or 30, then we know that we've actually broken the zone good and proper, and it's actually done it for a sustained period. Whereas if it does roll over from this point here and actually closes below the, say, 70.40 area, we can start targeting this very first support zone again at around that 70 cent mark. So this is the range that we're really dealing with, the 70 to 71, a pretty good range. I'm pretty comfortable with that because it does give you some good scalping opportunities. You can see that although it looks messy on that candle, even the move up from the 70 was pretty sustained. Then you could see you go up there pretty quickly. Okay, so it does give you moves inside this channel pretty easily once it does actually start to track. But what you need to do is wait for that reversal. If we're going to see a sell-off from this point here, we need to see a series of lower highs and lower lows on a 1 hour chart, and then we're going to get a similar effect, and we can probably bring it down to the 70 pretty quickly. But I would probably err on the side of pushing up. I mean, this is giving me signs now that it really wants to actually go up, not down. So I'll be looking and keener on the top end, I think. So if we see a break above, being above the 20 is significant, closing above the 71 is very significant. We get a close above there, then we can start pushing up to the 71.80 in the first instance. It's the next support zone or resistance zone that was support. Okay, so I'll draw that up there for us. Pretty good chance it'll probably be there next week. So we'll pop that there. And that'll also coincide with probably a bit of a breach of the 50 moving average on the daily. So good trading on the Aussie USD. Over to the CAD. CAD's broken a very important zone now. We saw last week that it was really, hovering and struggling around that 128. It's well and truly done that now. You can see we've had a big breakdown. I know the candle hasn't closed yet, but, it's not very far away from doing that. And if we do close it here, you can see that is effectively an evening star pattern. You can see the body, the star, and the second sell-off. So we've got an evening star underneath, probably more importantly, the important resistance. So, that has been resistance for quite some time, and we are trading, basically underneath it now. So what it does from here, look, to really play that pattern out, you need a daily close, slightly below this pattern. So when this pattern forms, if it closes where it is now, which is pretty, I'd say there's a really good chance of that, I would think that we need another daily close just below it. MACD is certainly giving us the signs that the weaknesses are set in. The rot's starting to set in underneath this resistance now. And if it does that, basically, we're going to be starting to target that 126 area. This is the area that we'll be aiming for. at that point. So it's a reasonable move. So yeah, realistically, it's worth the wait, but we want to see a daily breach past this level here, past the evening star, and then we'll look for trades down to around that 126.20 area in the first instance. And that wouldn't be a bad place for it to go. It's a pretty reasonable channel. So we certainly wouldn't have any problems doing that. If we go to the 1 hour, you can see that we're starting to see the sustained sell-off. We might see a bit of a pullback up to the 20 moving average, and maybe it comes off from that. But if we see a series of lower highs and lower lows getting our lightning bolt happening, then we've got a pretty good target to aim for. So we've got about, this is probably about 100, and if we're going down to here, it's a reasonable move. We're talking about, probably about 120 pips by the time it breaks. So certainly worth the trade. But again, we want to see that confirm. But it's showing very, very important signs that it wants to do that. All right, US dollar yen is the same. We talked about this last week, that it was looking weak and looking weaker and weaker, and nothing has changed this week. In fact, it's done exactly what we wanted it to do. It has broken down below that resistance zone that was support. Okay, so a roll reversal zone, well and truly trading underneath the 20 moving average now. And these are really important signs. Look, we talk about this all the time. The 20 moving average is a very, very important moving average. We know this. And roll reversals are obviously, probably amongst the most important things that we need to talk about. So they are doing all of the key things that are giving us the signs that the reversals are starting to kick in now. So, again, what we're probably going to see now is maybe a little bit of a retest of the roll reversal from below, and the 20 there to support it now. So not only does it have to break through a roll reversal, but it's also got to break through a 20 moving average, which is not going to be fun for it. And you can see, obviously, that we've been in a bit of a downtrend on the smaller time frames as well. This is the 1 hour. If we get a breakdown, what I would ideally like to see is a break below here. Okay. Even on the 1 hour, 4 hour, if we get a break below here and we start to see a series of lower highs and lower lows, we can start targeting that that new zone, which is around this level here. Like I said, this is the 125.20 area is the area we're targeting. And let's put a line there just so we know what we're talking about exactly. This is the line here that we're talking about. Okay, we'll put it at the 125, but this is the area. This is the zone that we're going for, our first real place. Because this is the last place it interacted for 3 or 4 days in a row. So this is why this is important. Even though we haven't seen a high around this level for quite some time in the back end, we know that we felt resistance there, and we had interaction for nearly a week at this point here. Okay, so this is why it's the next logical zone. And again, all we need is a bit of a break below there, and reasonable trading, about 120 pips by the time it breaks. So again, pretty good. It's still technically scalping, but it's almost getting into swing territory where we're getting the bigger moves, and we are actually pushing off serious resistance and support zones, which generally, to me, that really isolates the swing. People have all sorts of names for defining scalping and swinging trading and intraday and long term. Look, to me, really, scalping can be more defined in very small, sharp stabs at the market, like 30 to 50 pips inside very tight zones, where to me swing trading is more when we are getting the series of higher highs and higher lows, and we're actually trading into new zones or breaking past zones out of roll reversals. So it doesn't really matter what you call them as long as you actually understand what you're seeing. But that, to me, when I'm talking about swinging, I'm talking about going from one zone to the next. And scalping is more really trading inside isolated zones in my mind. But hey, that's just me. Okay, dollar index. Dollar index is done. The same thing, broken down the 20 moving average, and hasn't quite found support on the 50, but that doesn't worry me too much. What it has done, though, it's found the 106, and the 106, it's 106.60. It's this level here is, the 101.20 for me. It's a little bit more to go, and I think it'll probably get there. The euro really tells the story, but what really is probably the highlight of what really looks weak on this now is that the signal line is literally falling almost vertical. You can see it's such a sharp fall, and with the histogram actually angled like that, what that's telling you is the 12 and the 26, which is what's made up the histogram of the MACD, which is what this one's based on, has effectively just fallen straight down. Okay, it's in from here to here, they've effectively crossed. Haven't quite crossed yet, but they're about to. And it's a very, very tight period. Okay, really, really tight period. And it stands to reason that we've seen a very, very big sell-off there, so there's no surprises. But it does show a lot of weakness. So realistically, and quick weakness, momentum falling. And really the biggest beneficiary of that, of course, is the euro. We know that the euro has been up and up and up and up. We've hit the 50 moving average. This one has hit the 50, whereas the dollar index hasn't quite hit it. Now, these are very, obviously they basically track each other in inverse. So with this pushing the 50 moving average, I would think that we might see, we're at the 107, it's pretty much 107.30 at the moment. If we break past this level here, I would think that the 108.50 is the target that we're going to be going for, and we put a line there for it so we know where we're aiming. This is the level that I would be expecting it to get to. It's almost in the middle of this little mini channel. It was obviously support. It found resistance there and actually sold off there. The big sell-off and sustained sell-off started right there. So if we can get past this 50 moving average, this is the level that I think we're going to be aiming for, the 108.50, pretty logical target too. And you can see it's starting to build up. We've already had a reasonable trend up, 20 moving average pullbacks all the way, which we love. And you can see that we're also starting to pick up a little bit of momentum off this level now, and it's starting to get a series of higher highs and higher lows on the 1 hour. We need to see a break above this level, of course, on the 1 hour. If we get a break above that 107.50 and it starts to push up, I think we've got 100 pips there in the makings. You can see the 4 hours behaved itself lovely as well. Good series of higher highs and higher lows, and about to crack to a new high. And if it does that, obviously that's the same thing that we're talking about. If it gets up there, it's the same level. And you can see it getting to the 108.50 without a lot of trouble. A lot of the big problems are behind it now. And there's no question about that. All the moving averages and key things that would normally hold us up are behind us. But just as importantly, this one is rising very, very quickly. We're getting big momentum off the moving averages down here, the smaller time frame ones, and that is, I guess, coinciding with the very aggressive move up. We've seen 2 weeks of very, very strong action. We break past this 50, and 108.50 is our very next target. And I don't know whether it's going to go blasting past there and into the 110s. I mean, it might, but in the first, as traders, we really want to be just targeting the easy pips, and the easy pips are going to be the ones that it can get to without a lot of trouble in front of it, and that's going to be once it gets past that 50. The next level after that, obviously, is going to be, I like the euro. The euro is exciting me because I think it's giving us really, really good trading opportunities all the way. The next real zone for it, there's a couple. I'll draw all of them so we know exactly what we're talking about. But you can see here, right through this level here, every one of these had really good stops. It was very technical on the way down, and I would fully expect it's going to be technical on the way up. So you can see there, we've got the first zone at 108.50, then 109.80, and then 111.20 really is the zone that's probably going to really pull it up. But if it gets up there, we've made a lot of pips anyway, so we'll reassess when it does that. But first point of call, 108.50. Failing that, of course, to me now, to go short on this one, I would be needing it to break past the 20 moving average on the daily. If it doesn't get past the 20 moving average close on a daily chart, I'm not interested in shorting this one because I think it's got too much strength. So my bias is definitely long, unless we get a close below the 20 moving average, at which point we'll change our mind and start looking for the new support zones. All right, all important, S&P 500. We're seeing some pretty good strength in this one. Look, the double bottom that it really wants to form is getting closer and closer to forming. Okay, you can see it's not even there. That's a support zone, but we can bring it back basically down to the 40-90 area. That if it gets up to that level and breaks that zone, that's a double bottom. Okay, on a daily chart, which is a pretty serious chart. We've seen a trough here made up of very important reversal candles, as you can see. It's getting good strength. It's at the zone now where it's, I don't like it when it hits 20 moving average just before the neckline, but in saying that, if it breaks past the 20 moving average and breaks the neckline, that's a serious show of strength and momentum, because the 20 generally pulls it up. As you can see, it's pulled it up all the way down. And now we'll see if it actually can break up. The problem for it is that if it does break through the 20 moving average, it's got resistance not very far away. So it's very difficult to trade now, but it has been easy to trade up through this area because this is what we call an aggressive double bottom entry in the Ultimate Masterclass. So where these areas gave you the entry to actually get to the neckline in the first place. Now, the next obstacle is going to be to actually form the double bottom. And if it does that, if we get a close above the neckline, above the 41 really, then we're looking for push up to actually complete the pattern, which is going to basically take it back up to the 4,300, which would be a good result. Look, it's one of those ones where we've seen a very big sell-off. We know that. We saw the sell in May play out. There's no secrets there. This could be the one that reverses and says, all right, the market's has finished its sell-off. That's probably the important thing we need to take out of this. This is the pattern that could stop the sell-off that we've seen and start to see a bit of a pickup and a steadying in the market now. If this fails and actually gets back down here and breaks down lower, yeah, 3,600, 3,500's on the target. There's no question about that if it gets down and closes below this level here. But it's looking less and less likely by the day. And if this pattern does get up and break past the neckline, you know, we're probably going to see the end of the sell-off, which will be good because then we can start targeting the higher marks. All we're looking for is reversals of significance, and that's the important thing. When we're looking at sustained moves, we want reversals of significance at very, very key areas. And when we get those, it gives us all the information we need to know to start trading in that direction, because then the prevailing trend has absolutely shifted. Okay, so what we're looking for, we need to break the 20 in the first instance, and we need to get past the neckline. We do that, then we're starting to target high. If you're going to go, look, like I said, I don't even really like to short on this one. The only thing that would make me want to probably, think about shorting this one again now is if it fails at the 20 and doesn't even get to the neckline and starts to do a series of lower highs and lower lows on this time frame. If we get that on a daily or even on a 4 hour, if we get a couple of series of lower highs and lower lows on the 4 hour, then potentially we can start targeting the bottom again of that pattern at around that 3,900-ish flat. But yeah, that's probably not the way the momentum's going at the moment. But we can play it both ways. Let's just let the market tell us. Hope everyone's had a great week's trading. I look forward to seeing you all next week.